Joe, how you doing, baby?
Dude, I'm okay. I'm okay. I mean, I'm not gonna lie. I'm bored, man, because like in London, we're not allowed to go see our mates or anything. So, yeah, don't know.
I know.
Like, it's annoying. But I get why they're doing it.
It's going to get worse. It's going to get worse. We're seeing it across the Eurozone at the moment. But, I mean, they have to, dude. It's just, it's just going to be the case, as we said before, until vaccine comes into play, right?
Yeah, definitely.
But at least, anyway, as I said in our couple of podcasts ago, this is grind season, baby. It's grind season.
Yes.
Sod the socials for now. Let's start positioning ourselves to really make some money, baby. And kill 2021.
Also, dude, here's one thing though. Like, because you're still allowed to go to work and do stuff for work purposes. Like, obviously, US election next Tuesday. I can come into the office. We can get lit, but it's still work. Like, you know what I mean?
That's true. I'll give you that, dude. Yeah, exactly, man. Talking about that. How is it November, bro? Firstly, it's Friday, and now it's November. What is going on, my dudes?
Yeah.
Crazy.
Bro, no idea, literally. Like, it's just, there's been so much going on. So many themes, so many big moves in the market. Like, it just keeps you busy, doesn't it?
Big moves, bro. Big moves. Now, let me say something. So, okay, obviously we've seen some huge moves this week. FX, right? I said it in our last podcast because I put it out there on my Instagram. I was just like, obviously, we're seeing everything else. Like, markets were getting nervous. Why the frick were we oblivious to reality? Why were we out of touch with what was going on? But obviously, we're still seeing everything else. Like stocks, remember you said stocks were positioning with this risk off because of COVID. And then, obviously, we saw demand in bonds. US 10-year yields been coming down. And I was like, last week I was saying, why is FX not going? It's going to come. It's going to hit reality at some point. And it did. It did. Case closed. Honestly, sometimes I feel like still this. I told you it was coming. Like that. But honestly, bro, sometimes I feel like doing that. It's like, there you go. It's happened.
Yeah.
Do you know what I mean?
Dude, I know. You got to do it.
No, but honestly, bro, it's just like, for how long can we ignore it? And obviously, we just, like, FX hit the realization this week that, man, this is risk off now. Do you know what I mean? We were just like pumping. But anyway, go on, dude. What's your take on this week? What should we talk about first?
I mean, you're so right about all this risk off, because basically it's pretty much dawned on everybody that this coronavirus outbreak in Europe is really, really bad. Germany, France going back into lockdown, not just them two, other countries as well. Even apparently the UK Prime Minister is under a lot of pressure to potentially do stricter lockdown measures now, which obviously not great for us, but I get why they would have to do it. And so we've seen a lot of underperformance in these European currencies, like the euro, like NOK and SEK as well, even the Swiss franc, and then the ECB as well. That did not help things for the euro yesterday.
Yeah. We'll I think let's start off with talking. I just want to show you quickly, dude. You've summarised the whole week there, so I don't know what we're going to talk about now, bro. So we might as well just end this podcast.
Nah, we can go into more detail.
No, let's talk about the dollar. I'm just going to share my screen a minute, just because obviously we talked before. Obviously, you were just spoke quite nicely there and summarised the week before my sort of outbreak. So I was saying about FX, right? This is the dollar index.
Yeah.
I always like looking at the dollar index. So you can see this week, 1, 2, 3, 4 consecutive days. Today, we've still got room to squeeze higher, just having a bit of consolidation this morning. But that's just the FX realisation coming into play. I had sort of marked up here like a sort of a bull flag structure. We had the fake out there, breakout retest, and now it's just making way for a nice push to the upside. And at the end of the day, that's flows just come back into dollar. As we say, markets have just hit that realization, dude. Hit that realization.
Yeah.
Like,
yeah.
So I think, look, this is still early days. It can get a lot worse when markets start seeing data, because we still haven't had the data yet. When, obviously we've got all these restrictions, all these lockdowns, there's going to be less output. So eventually all these manufacturing, these services, PMIs are going to start crippling again. So that's when people are like, all right, now we're seeing the facts here. Let's sell all the riskier currencies, right?
Dude, yeah, that's a really, really good point. Like, and so when do we get those? We get those preliminary PMIs in the Eurozone, like mid-November?
Mid-Nov, yeah.
So, yeah, that'll be a big moment for Euro, but not just Euro, all these different currencies that have gone into lockdown. It's like, how bad have these lockdowns? Because these lockdowns aren't as strict as the first set of lockdowns. So the question is, how badly are they going to affect the economy? And like you say, we don't actually know yet.
It's true. We don't know. And yeah, that's a good point, actually. How bad are they going to be? Are they going to be on the scale of last time? Maybe not. We'll have to see. It depends how quick we can get at this vaccine. But then, can we keep living our lives based around waiting for a vaccine, dude? Can we?
I don't know because maybe like I don't remember. I don't know if you remember, but earlier on in the week, the EU warned that they won't be able to get the whole population of the EU vaccinated even by the end of 2021.
I read that. Yeah.
So. Yeah, it's like, man, are we going to be having lockdowns like on and off until 2022? Like,
don't say that, Joel. Dude, please.
I know. Sorry, I'm touching wood. But it's like, man, is that what's going to happen? I mean, hopefully not. But,
I know.
Yeah.
Just while on the topic, then obviously we're talking about the eurozone. So I want to share my screen again. Then this can take us into euro. Bear with me. Let me just bring this up. Euro dollar, obviously euro dollar absolute smash. Now I actually wrote a piece at the start of the week, just how you see euro dollars is consolidating, rising within this channel structure. And at the start of the week, I wrote, obviously we've fallen deeply this week. 1, 2, 3. We've dropped from 118.50. We've dropped like 200 pips this week. It's a big move for euro. Yeah. And I was just writing, I just said that we had the risk of breaking out this channel because of the COVID cases, obviously picking up attention there. And ECB set to strike a dovish tone. And my goodness, did they very well do that? They've really positioned the markets for some more action, right? Do you want to sort of bring us up to speed on that?
Yeah. So they didn't actually make any policy changes as expected, but they literally basically said, we're going to do some big easing in December. Like, you've had more ECB members coming out this morning. So this is one of the important things. Even the more hawkish ECB members have come out this morning and said, yeah, we're all on board for easing in December. So at this point, markets expect 500 billion in like additional QE via the emergency purchase program. Mm-hmm. Yeah. And potentially there's also some outside calls for a rate cut, which would be big as well. Dude,
further into negative.
Yeah, maybe to minus 0.6 from minus 0.5.
Interesting. That could be big.
It would be big.
That's big.
Yeah, it'd send a big signal that they're stepping up. And then also they got their refinancing operations, which they'll probably tweak that or do something new on that front. So big dovish stimulus coming from the ECB in December.
Definitely. I mean, it's only right, dude. It's only right with obviously Eurozone being at the moment, them being the most hit potentially at this stage. And then, we can't ignore that deflation's been negative for the last couple of readings as well. So, and these lockdowns will only make deflation fall further, right?
Yeah.
Further. And bear in mind, we haven't even had these restrictions, so it's going to get worse. So they have to be dovish.
That's a good point. It's like before this outbreak even really got going, like this second wave, it was already in deflation. Like, my God. They should do a rate cut, surely, if they're serious about getting inflation up.
They need to. Euro potentially in trouble. I believe, across the board. I shouldn't see why not now. Yeah. All right, let's talk about, apart from, COVID, ECB, I guess it's just focused now on elections, right? Is there anything else this week? Brexit went quiet for now. Actually, let's just quickly talk about this. I read that France are toughening up their stance again. Is this such a yo-yo? It's boring.
Yeah.
It's boring.
I know.
They said they're toughening up their stance again and they're not going to budge on the fisheries. It's like, Macron, get off your little high horse, you silly little man. Like, calm down. Calm down.
It's just fish.
It's just fish. Fish. Yeah. You greedy buggers. There's plenty of fish for everyone.
Dude, I know. Yeah, was that news this morning then?
That was
the French.
Yeah, very early this morning. Yeah.
Right, okay. Because prior to that, like the tone of Brexit was generally positive, I think, this week. Because do you remember there was that Bloomberg sources earlier in the week about progress being made?
Exactly.
So it's like GDP, I think, on the week. Let me just have a look.
Down.
I mean, it's still down against the dollar, but not as badly as the euro.
Mm.
But yeah, man, it's a yo-yo. It's going to continue yo-yoing until mid-November.
Bro,
that's what I think.
Do you know what? It could even go past November. Like, they could just get like some little. They could just get some little crappy deal, and then like they just carry on negotiating after that. Like, I don't know. I've read something about maybe just like this. I don't know what it's called. I don't know. Have you read something like a watered down deal of some sort? No.
Bare bones.
Give them
Free
a pure air
trade
pie there.
agreement or something.
Oh, no.
Yeah, I don't know.
No. Maybe I have to read into that one. I'll read into it further.
Yeah.
I thought I read something about them just quickly scrapping like a deal that's not great, but then they could carry on negotiating after. I don't know. God knows, mate. All right. Anyway, look, let's talk about something a bit more sexy. Oh, yeah, baby. Sorry, I just had to let that out. So we've got the US elections. Man, this is an interesting one. Because, I don't know, it's annoying because basically, you know, I've said this before, but I was talking previously, like weeks and weeks and weeks ago, about how Joe Biden was seen as, we've even said this, how Joe Biden was initially seen as better for risk on. Sorry. Let's start this again. Initially, I said how Trump would be better for risk on because we're going to have a potential new leader. It's uncertainty, right? So you wouldn't want to, you don't know what this guy's going to do, i.e. Joe Biden. So Trump's a safe bet. He's good for stocks, good for riskier assets, currencies, etc. I can get words out there. But then obviously it changed. Joe Biden was seen as the more risk on. That's why we've been pumping. He's going to come in, spend more with the Democrats if they win Senate as well. And then he's not really going to escalate things with China. So Trump was seen as the risk off, the more he'd be more dollar positive, right?
Yeah, agreed. I mean, I think, to be honest though, whilst that's still true, I actually think probably one of the main things at this point will be there's quite a high likelihood that this election is going to be contested.
Agreed.
Because, I mean, man, this is going to be a messy election because you know how it's like 80 million or however many people have voted via mail-in ballots, where it takes like 4 days after the election to count them potentially in some states.
4 days?
Yeah, man. So, well, it might be 3 days. Don't quote me on that exactly. But yeah. But it takes a while.
Sorry. I was like, you're exaggerating. Then you're like, yeah. sorry, carry on. Sorry, dude. Sorry.
Oh, no, it's all good. Yeah, no, basically it's going to take a while to know the result, a lot more than it normally would. And here's some of the quirks. So apparently the people that vote by mail are more likely to vote Democrat, and the people that vote in person are more likely to vote Republican. So on the night, it might look like the Republicans have won. So then you might get Trump trying to claim victory on the night, but then you might have the Democrats saying, no, we're not conceding defeat yet until all these mail-in votes are counted. And man, things could get
very messy.
Like really,
well said. I like that, dude. I didn't actually think about it. And the fact that you've looked into the fact that Democrats are more likely to vote by mail as well, dude. Nice research, man. Nice.
Yeah.
That's interesting. I didn't know that. Interesting. Now, this takes me in terms of market reaction. Either way, see, now I think, and I was writing this morning to the members, I think either way, the dollar has risks tilted to the upside in its favor because say Trump wins, dollar positive. Say Biden wins, dollar positive because it's going to get contested. You know, even if Trump wins, and Biden contests, it's dollar positive. Like, because of the uncertainty, safe haven flow. So dollar is really got some opportunity here, right? Would you say so? The safe havens?
Yeah, man. And like the European situation we've just been talking about. The only thing I would say about that, though, is that there's one scenario which I do think would be a big dollar negative, which would be if on election night it was really obvious that Biden had won and then Trump conceded defeat.
Oh,
so there was
he's not going to do that, dude. He is not going to do that.
I know.
My man.
I know. Well, but I'm just saying, it's a possibility. You know, you've got to look at what...
I know. You're an analyst. You really, really sit on the fence, my dudes. You've always got to have your both sides. No. But, no, I'll give you that. That's fair enough. But I don't see that as likely, but you've got to weigh it up as a probability. Agreed. Okay.
Yeah.
All right. Well, that's going to be fun anyway. Apart from that, it's a very, very, very busy next week. I must say so myself. Like, we've got final PMIs, we've got ISM, we've got RBA, we've got Bank of England, we've got FOMC, we've got NFP, we've got presidential elections. It's like non-stop, dude. And I've got
oh my god!
Oh mate, it's insane. I'm just putting all the research points together now for this for the weekly, and it's intense, dude. It's a heavy one.
Yeah, this is probably one of the busiest weeks all year, isn't it?
Yeah. It really is. This is the busiest
man,
week.
That excites me.
Yeah, I know. Yeah, it does. I'm going to be bouncing off the walls for sure. But yeah, dude. Apart from that, my broski, I think that's pretty much it. That summarises the week, to be fair.
Nice, man.
Yeah, other than that, nice, bro. Good one. Good to talk about. Stay lit, baby. Let's get it.